Good evening, everybody. That's the one I'm playing with today. Let me see. Chat window. There we go. All right. Better test this. We're having a little bit of flipping around on this. Can everybody hear me all right? Okay. All right. Okay. Kind of a rainy night here in Pittsburgh. So let's just kind of observe the obvious tonight. The obvious in the markets is that we're just moving sideways. Down, up, down. Notice what the Dow did today. Traded up, right smack dab to the T-line. Okay. All right. I've got a couple Mercuries like that. All right. So this is kind of the situation where, everybody's hoping the market goes up, but what the charts actually tell us is what the market's actually doing, which is it's not doing anything. The S&P 500 pretty much follows the Dow, doing basically the same thing. Just a very, very slow, mild uptrend, but not enough to tell you there's any trend. The NASDAQ is the one that is most compelling, which now kind of really illustrates that the market is not going up or down. It's specific sectors, and right now the sectors in the NASDAQ are acting better. And even the transportation index, even though it traded up strong today, is still in this downtrending channel. So when you can take a look at all four of those indexes and view them in a matter of a minute, you pretty much can make an assessment of what the market trend is, and basically there is no market trend. So that puts us right back into a position that we'll get into here in a little bit on the markets. The markets don't have anything to do with what is profitable in the markets right now. Channel those indexes, and the bottoms could still be slightly over. Yes, we're in the oversold area in the transportation index, but here's the very important aspect of why you want to learn what a candlestick signal actually is. As you can see, today's up day in the transportation index was just an up day. It wasn't a reversal signal. This is not any type of signal. And today there was potentially a doji harami here on the in the Dow. So this is all the elements that you have to look at to say, all right, which way is the market going to be going? As Don pointed out, we could still be on a downtrend, and notice what the trend of this market really is. Comes down, goes up, comes down, goes up, comes down, goes up, comes down. Where is it going to come down to? That we don't know. I would suspect probably somewhere right on this support level. But what we have as far as parameters to tell us what's happening here is, first of all, we're definitely not in an uptrend. Stochastics are still heading down, but we've done a bullish harami right on the 50-day moving average. So we've got different elements. We're below the T-line, stochastics still heading down, but we're sitting on a support level with a bullish signal. The thing that we have going in our favor is we know what should happen after a doji. market's usually going to move in the direction of how they open it after a doji. Yes, the slope is very slow to the upside, but very slow. I mean, if you took this point right here, you're basically at the same level you were over the last 3 months with some oscillations in here that you wouldn't call a trend. So your longer term trend is up, your shorter term trend is down. You've got some indicators still pointing down, and you've got a signal that potentially could be bouncing you here. So we still don't have anything to tell us which way the market's going to go. All we can do is kind of analyze what the market might do from this point based upon the signals we're looking at. Okay, some of the other indicators, interest rates aren't doing anything of any consequence. Bond prices came down. Now we're just kind of trading flat. So, and on a relative basis, interest rates are still so low that it's not affecting anything in the market. Now, I've been trading long on crude oil for the last couple of days. Again, this is where knowing what the candlestick signals are actually telling us is we saw a doji right here smack dab on the 50-day moving average of the crude oil prices. Why is that important? Because we know it's common for them, if they break through a resistance level, that they'll come back or they move away from a major moving average. We can see exactly what their investor sentiment is at that potential support level. And what do we know about the doji? It's going to move in the direction how they open it after a doji. Jim, you might have to help Marilyn. I guess everybody else has slides. Excuse me. So when was I buying crude oil? As soon as I started trading positive after a doji in the oversold area, bouncing off the 50-day moving average. This move right here was on 4 contracts was a good $8,000 move the other day. Today did exactly what we would expect it to do after a big day. Consolidated, and notice where it's consolidated to. Right smack dab to the T-line. So I was taking profits up here, but if you go to your 10-minute chart, 10-minute chart said take some profits, and then look what happened when it got back to the, on the 10-minute chart, back to the 200-day moving average. We started seeing buy signals. And where did these buy signals occur on the daily chart? Whoops, let's make this bigger. Right smack dab on the T-line. So looking at our 10-minute chart, what was that basically telling us? It was telling us that the T-line on the daily chart was probably going to hold. And so we were out, started coming back in, got back out, got back in, and started riding it back up. And right now we're still long crude oil because on the daily, what type of potential do we have tomorrow? It's trading right here after hours. But what type of potential setup do we have with stochastics coming up? We could have a doji sandwich breakout, which tells us we could have another big strong day. So will it have another big strong day? That we don't know. But if we start seeing trading a positive tomorrow, at least we know what our trade setup is looking like, a doji sandwich, and where was it coming from? Again, a doji right off the 50-day moving average, doing a Morningstar type signal. And if it's trading positive, what's that tell us about our downtrending channel? They're breaking through. What's that tell us about our longer term positioning? Probably wave 1, wave 2, wave 3 could probably at least bring us back up to the 200-day moving average. So this is, again, just knowing what the signals are telling you, what should happen after a signal, and what all your confirming indicators are telling you. If you add that all up, it just puts you in the right position at the right time. Yeah, Marilyn. Yeah, read what Don was trying to check a couple of the other tabs. All right. Also, cocoa. There's your bearish doji sandwich that brought you back down below the T-line. Where's the next possible target? Probably right here at the 200, which would kind of assume that the 50 and the 200 are going to meet. That's more than likely your target. So at least on a trade basis, you know what we should be doing right now. We should probably be trading to the short side. I don't know why I'm coughing here. And cotton. The reason I wanted to show the cotton chart is, again, this is the charts give you much more observe the obvious. There's been a problem with the. Okay, I don't know what was the problem. Notice we had a big shooting star. We're still in the oversold area, but what's the other criteria that we should be looking at? First of all, kind of topped right out at the top of this trend channel. And then secondly, after that big shooting star, it still sold off. So this still makes for a very good short on weakness tomorrow, because what's that basically telling us? It's telling us that this trend channel is still in progress, that they failed up here, and where's our next likely target? Well, we could probably draw a line right down through here, so I'd be looking at it head in this range, or this area. Yeah, try it again, Marilyn. Sometimes it just doesn't click in. And here's a reason why I usually try to buy on a buy stop. Look at the hog chart. Hog chart, we can analyze, see what type of pattern we're in. Nice wave one, pullback, rounding bottom. Where is this the best time to buy over here? I would guess right up here when it broke out. So until it breaks out, we don't know whether we're in a wedge or whether it's ready to move up. So I'd rather buy it. I'd rather pay up for it knowing what the pattern is doing or telling us versus trying to anticipate, because for all we know, this could be waffling in here for the next 2 weeks and you're stuck in the trade. I'd rather be buying something that I know is creating a pattern breakout and be in it while it's moving. So tomorrow, I'll have my buy stop right here on lean hogs. But if it comes up through there, where do you think our next target is going to be? Probably at least back up to the 200-day moving average. And there are charts that you can look at and say, all right, which way is this? Which way is gold moving right now? Well, if you can look at a chart and say, man, I have no idea which way this is moving, very simple, move on to something else. Because if you're trying to guess what this is doing or anticipating, that's all you'd be doing, because we're not getting any message here of what gold is doing. It could be in this big fry pan bottom, but it also could be in this slow move up and a failure again. If I was going to trade this one, notice that we're not quite in the oversold area. I'd put a sell stop right down here, because if it broke down through there, that told us they were failing in this downward trend channel. So down here somewhere is our next target. So this is the, again, the way I've been trading for years is what type of pattern can we expect coming out of here? And I would rather trade, I guess what you would call, into that pattern versus anticipating what the price is going to do. Okay, let's see. I guess that's about it on the commodity side. Oh, DXAM, the dollar. Dollar, look what type of pattern it's setting up. There's your little J-hook pattern. So if I'm looking to buy the dollar right now, because it looks like it's a nice pattern, is this telling me anything? Not really. That's where I flip to my 10-minute chart. Hey, look at my 10-minute chart. Big fry pan bottom. I'll get ready to buy once I start seeing some strength. Oh, coffee. I was in and out of coffee because it had moved up and then broke down today. The daily chart had popped up, hit the 20 and backed off. But what's our signal right down here? We're in the oversold area. We have a doji, and then the third doji followed by a gap up. What's that telling me? I'm watching my 10-minute chart to see if it starts coming back up tomorrow, because what would we expect coming off of this chart pattern? Probably at least a pop back up to the 50 and or to the top of this channel, which is just above the 50, and see what it does from there. So knowing that it did a doji gap up and stochastics are coming up, I can pretty much project with a good degree of probability that on positive trading, this is still moving up, and I'll stay in it as long as I don't see a sell signal and or trading back below the T line. Okay, some of the stocks that look attractive. There was that doji gap up in MX. I would suspect that MX is going to be at least a 45 degree, and possibly, make this a little bit bigger, possibly if it opens positive, you could get the same trajectory as what this trajectory was. But worst case scenario, think you're in this trajectory, still more upside. An AMCN, also a nice looking chart. There's your left-right combo. There's your J-hook pattern. There's your gap up. I would suspect the worst case scenario is if this isn't a power move out of here, taking it pretty fast, at least you're going to be in a nice steady up move, because this is a very strong sign here. Left-right combo followed by a gap up tells you they were anxious to get back into this one. Making lots of money on ADXS. There was your little cup and handle or your J-hook pattern. Open positive today. What's our projection? Well, if this is wave 1 and this is wave 3, they should probably still bring it back up, at least up here. Wave 3 bringing up into about the 32, 32.50. Okay, good, Marilyn. Sometimes they come in on and all the connections don't get hit. Eyes, people were worried about it today, but this is why you wait to see how they close it. They came back and consolidated all the way back to the T-line and then brought it right back up again. And why is this still a strong chart? Because this was our signal right here, our best friend, doji gap up. They used the 50 for 3 days as support. You're using the T-line as support. At this point, you just stay long until you see a close below the T-line. AMBA has also been making some very good money on the option side. I don't know how these little things get in here. But came out of this slow curve, broke out of this wave 2, and where did it do it? Right smack dab off the 50-day moving average with a left-right combo, followed by a doji sandwich, followed by a gap up through the resistance. Then you had your J-hook pattern. So this is stay long on this one. This one was up 4 points today. Now, I owned the 90s. Forget where I bought them, but I had some huge profits in them. So what was my risk-reward factor at this point? Well, notice how we're starting to move away from the T-line a little bit. There's always the old adage that if you hit 90, you're going to go to 100. But if they go to 100 pretty quick, we're going to be a good fur piece away from the T-line. So I closed out my 90s with a good profit. Then I bought a 95 and sold 100 spread. What's that do for me? Well, first of all, put a lot of profits, and I'm going to hold through earnings. Because remember, candlestick signals are the accumulative knowledge of everybody buying and selling during a particular time frame. And they're buying still going into earnings. Now tomorrow, if they do something like a shooting star or Barry Sharami, I'll probably close the position and wait to see the earnings. But if they open it and they close it up here, still buying going into earnings, that means somebody a lot smarter than me is still buying the stock knowing the earnings are coming out. And I've reduced my risk by taking the profits and doing a spread. So now I have $1.95 in a spread that if it keeps working and goes up through 100, all right, my $1.95 has gone to $5, which is still a decent percentage return, like a 150%. If it fails, all right, maybe I come out of my spread instead of at $1.95, maybe at $1.40. All right, so I've lost 50 cents, but my upside potential was closer to whatever that is, $3. So anyways, that's how I kind of mitigate my risk factor, that once the price is up in the overbought condition in a higher risk area, then I bought them at 421. Thank you, Don. Couldn't remember where I bought them. So I apparently bought them up in this area, and I sold them out today for I think it was $7.39. So now I've reduced my risk exposure, but still have a lot of upside potential. If all the price has to do now is move to 100, and I've made 150% of my money. That was AMBA. Okay, MDSO. That's got that fry pan bottom, and where are we? Well, right smack dab where it kind of peaked out before. Makes this very simple. On a positive open, doing a doji sandwich that tells us they're breaking it out. Probably this move right here and this move right here will be approximately the same. And this one has just been a happy OPK. Fry pan bottom, J-hook pattern. And how are they starting the next wave of the J-hook pattern? Doji gap up, your best friend. So if this one moved from 14 to 18, there's a good possibility this could move up into the $22 range. Sound is not consistent. No, maybe that's me just hemming and hawing. MDR. Here's your inverted hammer gap up, and where are we right now? Right smack dab on the resistance level. Makes this very simple. If it opens positive tomorrow, they're breaking out with a potential of the next move like this. Okay, some of the other ones that have been acting well. SN or SSIN. There's your doji or not your J-hook pattern in progress. It backed off today, but here's some of the things you kind of analyze. This is why I have the 3T on my chart. As long as it stays above the 3T, I'm comfortable, because obviously it's not below the T line. And if it closes above the 3T, that means there's still a lot of strength in this current move. So if this opens positive tomorrow, giving me a doji sandwich potential, I'm buying right away because of the probabilities that if it opens after a doji type day, it's going to move positive. That this J-hook pattern, if this is wave one going from 950 to 1350, 4 points from here could take you up into the 1750 area. What did I just do? SSR, okay, SRNE backed off a little bit today. It has to open positive and trade positive. If it opens lower, what's it telling you about your trajectory? Number one, it tells you your J-hook pattern disappeared, and two, back below the T line, that's not a lot of force. That's telling you you're more in a sideways, that you want to be out of this on any weakness. GIMO is setting up nicely. We can see what happened after the big move up. We were in a 45 degree. They traded just below the T line, but notice what the nature of the trades were below the T line. Doji, hammer, doji, now bullish confirmation. And what else can we see? The 20-day moving average was acting as support. So if this opens positive tomorrow, you've got that little scoop type pattern, and you're still in this uptrend. You want to be buying this one because the next move likely is going to be the top of the trend channel, and then see what it does from there. Where would I put my stop on SRNE? If it opens lower and doesn't immediately start trading higher, I definitely would be out of it if it comes back down below today's low. This one needs to really open positive, and even if it opens lower, it needs to start trading positive immediately. If it opens and starts trading down, you close it out. What's the worst case scenario? You can always buy it back if it starts coming back up through the T-line. eBay has broken out nicely. There's your resistance level. Make this a little bit smaller. You can see there's kind of a resistance level and a big fry pan bottom, and they've broken out, which basically puts us into wave 3. You don't want to do that. So if this is wave 1, wave 2, wave 3, whatever this was, 52 to 60, should take you up into about the $68 area. That was eBay. SGEN. This is again where do you take profits? You know, it hasn't been able to close. If I took profits here, I'd be buying back in, especially if they open up positive here. If I took profits here, I'd be buying back in. Once again, I don't mind coming out of a position and then getting back into it, knowing that it didn't confirm the selling. I just don't want to be holding on to something, hoping that it's going to do this, and holding on to something that keeps tanking like this. I'd rather come out and buy it back, so I've missed out on 43 cents. When I bought this, I wasn't buying it for 43 or 86 or $1.20. I was hoping I would get a 4, 5, 6, 7 point move off the trade. And if this moves 10 points and I only get 8 points of it, that's fine with me. I just know that every time I was in that trade, the probabilities were in my favor that I was going to make money from that trade. Another fry pan bottom, FSL. Just stay long on this. Notice where it is compared to the T-line and the 3T line. This one's still very viable to be bought on positive trading tomorrow. Same thing with NXPI. Very obvious fry pan bottom. And where did it break out? Right here on a big day. There's your doji sandwich telling you there's more upside. Even though it backed off a little bit today, didn't break the trajectory of the fry pan bottom. How long do you hold this one? Until you see a sell signal and a close back below the T-line. We recommended OVAS based upon, there's your little J-hook pattern. There's kind of your head and shoulders, or your bearish, bullish head and shoulders. I would suspect you're going to have much more upside on this one. ANTH. Another kind of big rounding bottom. You got a doji. Makes it very simple. If they start trading positive tomorrow, they're pushing on this breakout area. And then this is not unusual to see that when you see it get near a resistance level, if they gap it up and start trading positive, you want to buy immediately, because they're not going to be gapping it up knowing that there's a resistance level right here that they're going to run into. If they're gapping it up, that means that resistance level is not going to take any effect on that price move. You still got a lot of upside. So I like to see the gap ups, especially going into a resistance level. RTRX, I think this was being pointed out. Notice kind of that little scoop type pattern and a breakout to the upside. SUPN. Another one that's got this big fry pan bottom. If I was looking to buy this today, this is exactly why I want to see what it does after it opens. A lot of people say, well, you buy on the open. What's that mean? That means if it opened here, let me see if the 10-minute chart will help us on this one. If it opened up here, and I'm ready to buy, and I start seeing a move this way, my first thought is, all right, they're selling it off right now. Let me see when they stop selling. Well, they didn't ever stop selling till all the way down here. Now I might be buying it. At least it gives me better timing. And the reason I'd be buying it is exactly what the chart pattern is telling us, that it came back, hit the T-line, bounced back up. We're still in that fry pan bottom setup. Rambus, I was just trying to show this one also, is anytime you see that support on the T-line and the pattern, just get ready to buy. Big difference between a pattern and a signal basically is that a signal we want to buy when the stochastics are down in the oversold area. The pattern is usually going to be bought when it breaks out to the, or when it's in the overbought area. That's the breakout area. Quart was also a very nice fry pan bottom. And notice where the fry pan bottom was getting the support from the 50, the T-line, and the 20, all in this area. Basically telling you, you can be buying this one. All you have to do is be conscious of what it does once it gets up here. And if it breaks out, now we're in another good strong wave. These are precursors to the next big price move. This is the buildup. You couldn't trade this one way or the other if you wanted to, but you can definitely trade the results of them. And we've been short CENX. I think Gary had pointed this out today, that at the end of the day, what did our short position do? We should have stopped out. Anytime I'm in an oversold condition, they better not be trading back up through the previous day's open. So if I was short today and saw it trade down here, I'm happy. But then if I see it turn around, where do I not want to see it trade? If they come back up through the open, we're going to start having some sort of candlestick signal, either a doji, a hammer, bullish engulfing signal in this case with a booster. And why are we suspicious that that might be a reversal signal? Because notice where our stochastics are. Elsie, when we're buying a signal, we're usually looking for the stochastics to be in the oversold condition. That's been a change of investor sentiment. If we're buying a pattern, usually our stochastics are already going to be in the overbought condition. So there's a lot of people needing clarification. Say, well, should we buy? Right now we're in the overbought area. You do if you can recognize the pattern. The patterns are usually the buildup of investor sentiment. And what's kind of the truism of what the Japanese rice traders usually tell us? Where do most people buy? They buy enthusiastically at the top, which means whenever a pattern starts breaking out, that's when the enthusiasm comes in. Where do most people sell? They panic sell at the bottom. That's why when you see a gap down or a big signal at the bottom in the oversold area, that's usually the reversal. Okay, and then so what are we working on? CENX. CENX, we had to be a little bit suspicious. Oh, man, that's not CENX. We had to be a little bit suspicious or a little bit more diligent, because where were we in this trend? We were down here in the overbought or oversold condition. So we should be trading down. That looks good. That looks good. But when it was trading down here, what other very simple analysis can we kind of view off of this chart? Look how far away we are from the T-line. We're in the oversold area. We're a huge distance away from the T-line. What gives us the suspicion that we should be watching? Again, that distance away from the T-line. So if I'm trading down here, and I've already got a huge profit, 35% being short in this position, and this is in the suspicious area, being oversold, and still trading down big, what's the simple analysis of this? You go to the 10-minute chart, everything's happy, everything's happy, everything's happy. Whoops, there might be some buying, not real critical until where? Until The 10-minute chart tells you they're starting to break out to the upside. Close out the position. Because if this is going to start, or this looks like a strong bullish move right here on the 10-minute chart, I can easily extrapolate into our daily chart, but they're bringing it back up in the oversold condition, well away from the T-line. Take your profits. How far down into the prior candle can a doji harami be and still be considered a doji sandwich possibility? Previously, I thought the doji sandwich setup would have to close above the prior day's close, but you mentioned one ticker as a doji sandwich setup for tomorrow, but it was a harami a ways down from the prior close. Ooh, Lynn, I see. Anybody remember what that chart was? Was it a commodity chart or was it a stock chart? I have to think of which ones on the commodity charts. Around AMBA, okay. Not MX, because that was still up there. ADXS. Crude oil. That have been it? You think it's stock? All right. That's close enough to the top there to tell you had a doji right near the top of the trading that I want to start seeing what it, that's close enough. Now, if the doji was down here, it would still be viable. It wouldn't probably have the same force as a potential or a true doji sandwich. But let's say it had closed right here as a doji. After a big morning star signal, stochastics coming up, I'd still look for a positive open. Might not be the same magnitude as the potential of this trade. And again, this is after hours trading. But if tomorrow morning I see they're starting to trade this up, I'm going to be buying some more immediately. That the doji sandwich is in progress. Is Scotty. Scotty, the same scenario. It might not be a doji sandwich, but what's our simple rule of a doji? It's going to move in the direction of how they open it. And where are our stochastics? They aren't yet to the oversold area. They're still drifting down. So if this opened lower tomorrow, it wouldn't be a pure doji sandwich, but it would still tell me that what did they do today with the doji? They came up and they failed again at the T-line and the 20. But if it opened lower, we're still targeting the 50 or the 200. So remember that simple rule. They're going to move it in the direction of how they open it after a doji. And my suspicion on this chart, the opposite of the fry pan bottom, your dumpling top, is that any weakness on this one is going to see some more downside. Potash, we shorted this one today because this was a kicker signal, a little baby kicker signal, or a trend kicker signal. And where did it occur? I mean, you could pretty much draw a, I want to make this a little bit smaller. See if I can do this without goofing up too bad. You can basically draw the trend support level, and it did a kicker signal down through that. So what does that do on our chart? Oh, get more stuff on this. That basically says wave 1, wave 2, Wave 3 is probably going to be the same magnitude. This was about 6 points. 6 points from here could take us down into about the $26 area. Yes, Ed is kind of describing you can use whatever you want to fine-tune the basics. And the basics are if you know what should happen after different signals and patterns. If you follow a lot of Ed's formulas, you're going to put yourself in situations where the probabilities are a little bit more in your favor. Okay, with that, are there any general questions on candlesticks? Out of eyes. Whoops. All right, here's what my analysis or my observations have been through the years. First of all, your stochastics are headed up. You're not in an overbought condition. Secondly, you had a very strong buy signal. That doji gap up, now you had kind of a double doji off the 50. You're in an uptrend. All right, if it's down here, depending on where you are during the day, if you're able to sit and watch it, once it gets down here, it's already here. I know this sounds like it's not a very sophisticated analysis, but if it's down here and you're looking at it and saying, all right, what should I do? You still have to take the other part of your analysis into play. If it's here, either something drastic has happened, which if there was no announcement of anything, you still have to play the very simple rule that it needs to close below the T-line. Now, if it came down below the T-line and you got out, and then you saw it turn around and start back up above the T-line, what's your assessment at that point? No, they're not going to close it below the T-line, or they may not close it below the T-line. If it happens early in the day, you know, they're bouncing back up and ready to take it back down. But my simple rule of thumb is if it's down here, it's already here. What's it going to hurt me to hold on to it to the end of the day? But my probabilities are I'm in an uptrend. This is probably just profit taking. I want to see what it does by the end of the day. What does the J stand for in a doji? I have no idea. That's how they spell doji, I guess. A doji is when it opens and closes pretty much at the same level. It can look like this. It can look like this. Just indecision. Let's see what else. Okay, the Dallas, Fort Worth. I used to do a lot of sessions for Dallas, Fort Worth. Like you said in your book, if you're trading on a daily chart with the same time frame, exit. Yes, very simple. If you're buying based on a candlestick buy signal on a daily chart, you sell with a daily sell signal on the chart. When you say buy, if it opens positive and starts trending positive, what would be waiting time? Somewhere around there. Now, if the market, let's see, I'm trying to think of which one. Well, what I don't want to see is it opened lower. So I'm trying to pick out any chart. Don't want to see it opening lower and the market opening showing that the pre-market futures are showing that the Dow is going to go down 140 points. That's not a good. But if we think the market is flat, which it is right now, or trading positive, and we see what we consider a positive open, meaning the Dow opens down 15 points or 20 points, not anything that would tell you that it's any more than the bid-ask move, and the stock is opening positive, that's telling me the market's not falling out of bed and the stock is still trading positive. I'll give it a minute, 2 minutes, 3 minutes, make sure it's trading positive from there. Also stopped out. Should I buy back on positive? Yeah, because what was our simple rule? You stay long as it doesn't close below the T line. If you stop out, what do we want to see tomorrow? I'd like to see it start trading positive. I'd be buying it. And now, if it opened lower tomorrow, I'd wait to see if they start bringing it positive. And how can I tell that? Very simple. I just see what the color of the candle is. If they open it lower, start taking it down, that means they're probably coming back down to test the T line again. Trade well. I usually tell people that if I am trading my portfolio, and let's say I've got $1 million account that I'm trading, I'll decide how many trades do I want to be in. And if I decide, all right, I'm going to have 10 even dollar amount trades, $25,000 per trade, then I stick with that parameter. Because that does two things for you. First of all, there's going to be times, and again, this is all based upon my emotional weaknesses through the years, and those weaknesses came from being the worst investor in the world, that if I decide I'm going to have 10 $25,000 positions, each position is still equal to each other. Because if I look at a chart and say, man, this is really a nice chart, I normally put $25,000 in a position, but this one is great. I'm going to put $50,000 into this position. I can bet you dime to donuts. I won't even bet you. I know that you're going to spend 90% of your time analyzing and watching that trade, and the other 8 or 9 trades that you have on, you're going to pay very little attention to. And the reason I keep them all equal dollar amount is because if that trade that I thought was the best one in the world, which I now have a little bit of my emotion in, if I put extra money in it, I've got a lot of my emotion in, and that tells me, or that's going to be a situation where if that trade doesn't work, my mind's going to say, wait a minute, you're smart. You said this was going to be a good trade. Let's give it an extra day or two to see if everybody that's not as smart as you starts buying and starts coming back up again. Then you're holding on to a trade that you shouldn't be in because you've got your emotions in it. If that $25,000 position that you thought was the best in the world isn't doing what it's supposed to, now you're just closing out one position or one unit of your portfolio. Secondly, if I have 10 positions on, I can analyze those positions at the end of the day in a matter of a couple minutes at most. But the next day I see a fantastic position, that gives me a little bit of discipline. And I'll go back to the 10 positions I have on and say, all right, if this new position opens the way I want it to, which of these other positions have the weakest chart? Well, if I pick out position number 8, if it opens lower, it's probably starting to get weak. Then I close out position 8 and buy the new position. And what that does is it keeps me from holding on to positions that I think could still go up but doesn't look good right now. So it kind of does a self-cleansing or cultivating of getting out positions that are so-so and getting back into positions that look great, which if you keep doing that, your probabilities of being in good trades are going to improve that much better. So anyways, I usually keep 10 positions. Now, if I'm trading positions and options, I keep it at 10 positions, but 9 of those positions may be stocks, and 1 unit will be my options, but I might take that $25,000 unit and buy 6 options. So now I'm trading, whatever that is, 13 different positions, but that's still not too many to keep track of. And I always give the illustration where Susie Orman said you shouldn't have any more than 4% of your money in any one position, which means you have to have 25 positions on. And I always illustrate it to the fact that they pay analysts on Wall Street millions and millions of dollars to analyze 6 or 8 stocks, and most of them can't do that very well. Why would we expect trying to follow 25 stocks we're going to do very well at it? Is there anything bullish on STEM? Nothing that I could see that would make me want to really be in this stock. You've had a potential buy signal, which was the doji or the gap up, but then notice what this day did. It closed more than halfway down the candle that told me the bulls were in control. That told me there wasn't a lot of bullish sentiment there. Day of indecision, yep. Would you keep like 50% in cash of your trading portfolio? No. Usually I have 100% of my money in positions for 2 reasons. Because of the simplicity or simplistic viewing of candlestick buy and sell signals, I would say bullish signals or bearish signals, out of a universe of, I think there's like 8,700 trading entities out there, and if you sort them by the volume, and in my case more than 200,000 shares a day, that takes your universe down to 2,700. On any given day, just doing the simple scans, you're going to find more than 10 positions that are either good bearish or good bullish positions. So I'll always have 100% of my money invested. Now that doesn't necessarily mean I'm 100% in bullish positions. I might be 8 positions bullish, 2 bearish. Or in a bearish market, I might be 8 bears and 2 bullish. In a sideways market like this, I might have 6 bullish, 4 bearish. But I'll always find more positions than I have money to do. Okay, here's another thing that you want to kind of consider. Notice how strong this was. You said you got stopped out near the end of the day on your 10-minute chart. Ooh, was it this one? Yep, was it that one? First, Sean, where was it? Do you set stops based on the 10-minute chart if there's a lot of movement? At 28 bucks, at 28 bucks. All right, so you stopped out right here, but notice where on my 10-minute chart still shows it didn't close below that level. So let's see. Yeah, I would have definitely wanted to see it close below that level. Why? Because notice what the previous it was previously doing right up until where they opened it and took it down and then started right back up again. All day long, they couldn't close us below the T-line. And what was that doing as far as our 10-minute chart? Telling you that there wasn't any selling going on. And what was that doing to our daily chart? It was telling us they broke out through this level with a big price move. I would anticipate more upside. So when do you buy back in? I don't know whether I would at this point. I take it if you closed out at 28, all right, you missed out on 77 cents. But now you have to ask yourself, all right, I got out, took profits. I take it you had profits in this. If I was looking at this chart and I wasn't in it anymore, what's my analysis? Is this the best place to be putting my money? And the answer is probably not. But man, would I hate to see this continue to go up and without me. There's some times where if you got out, you say, all right, is this the best place to buy back? Definitely not. Go and take that money and go find something that has a chart that tells you, well, this is a much lower risk with good upside potential. Yes, Ed's said it too. You could also be, even in a sluggish market, I mean, right now we've got plenty of charts that are showing very strong bullish signals. And again, that becomes a simple function of the scans that it's finding the areas that they're buying and or selling. And right now there's just too many bullish charts. I'm guessing. Right now I'm probably long most of my positions as far as my option account. I did close out things like cyber on a very simple premise that if this pattern was working, we should have broken out to the upside. When they gapped it down, they were coming back to the T-line. So I closed it out because there really wasn't a pattern here. But I've been short some of the commodities during this move. How do you set your stop based upon the T-line? If I'm owning something, I still want to see it close below the T-line. Now, is that giving up some of your profits? Yes, but remember, we're not trying to sell at the absolute top, and we're not trying to buy at the absolute bottom. We're trying to get that fat part. And if you get the fat part with a high percentage of correct trade ratio, your compounding effect is going to be a heck of a lot bigger than trying to not getting into a position that hasn't confirmed at the very bottom and trying to get out at the very top. Jazz, what percentage of your trades are options versus stocks? It all depends on which account I'm trading. Usually my big accounts, I'm just trading the stocks. My small account, I'm usually just trading options. Or my medium-sized accounts, I'm trading mostly stocks with some options in it. You use automated stops or manual stops? I usually use manual stops. If I'm sitting here watching something, which I am a good portion of the day, I'll set my stop. Or if I'm going to go off to lunch, which is usually I have commodity trades open, I'll set a stop or put in a stop somewhere where it shouldn't trade if the trade is working well. And I'm trying to find out an example. Yeah. I can't find one that. Here's be a good example. Let's say this is the. Let's say this was a 10-minute chart, and I was just about ready to go off to lunch, and it was doing this. I'd put my stop above the T-line because I'm already in the oversold area, and if I'm going to go eat or I'll be out for a couple hours, I don't want to see them trade it back up here. They should be still trading it in this direction. So I'll pick a spot that tells me they shouldn't be trading in this direction. Let's see, HRTX. Anytime I start getting big wild moves like this, if I was in this up here, I'd start probably on my 10-minute chart, or I'd put my stop just as a safety valve. It shouldn't come back down through this level, because if it opens up here and immediately starts dumping, that means they're selling it off. I want to be out of it, especially if they come back down through the previous day's open. Should it be concerning if you find yourself in all of one industries? Not concerning, But there's also a different, oh, I always smirk, chuckle, how's that? Chuckle at these money managers say, oh, you should diversify. And I always wondered, why should you diversify? And I know their answer is because if something goes bad, at least your other ones are working well, or you don't have everything going bad on you. And to me, that's just saying, yeah, put your money all over the place, because you're not going to spend, if you're not planning to spend time watching it, you just don't want one thing to go bad on you. My answer to that is, if I'm trading, I'd rather put my eggs all in one basket and then watch that basket very closely. So it doesn't concern me that at some point out of 10 positions, I might have 4 positions in computer stocks and 4 positions in trucking stocks, because those 2 industries for some reason are acting strong right now. Now, in 4 days from now, that might be a completely different situation. But I want to be buying where everybody's buying. I'm not trying to diversify my portfolio. I'm trying to buy when the buy signals tell me when it's time to buy. And if those buy signals are coming in on 1 or 2 sectors, yes, I want to be in those sectors. SUPN, does it have a dark cloud? Rick, I guess the first question is, where does a dark cloud have to close to be considered a dark cloud? So this is why we want to keep reviewing the 12 major signals, because this isn't a dark cloud. Where should this dark cloud, if this was a dark cloud, where should it have closed? More than halfway down this candle, which it didn't do. So what is this day? It just looks like a profit-taking day. Right now, as we're still in a pattern uptrend. What should be a realistic goal for monthly, yearly return? That's all up to each individual want to be. It depends on how aggressively you trade. If I could trade full-time, which I can't because I'm doing so many other things here as far as research and that sort of thing, I would expect to make at least 10% return monthly on my portfolio of 10 positions, and probably get me a little bit of sluff because some of that would be margin. Which if you compound 10% over 12 months, that's a 312% overall return, which I don't think is undoable. Let's see, undoable, is that a word? I think that's very doable. And the reason I say that is because I've done it before many times. So remember, we're not trading on the normal, what do I want to say, the professed Wall Street teachings that you diversify your portfolio, you have some money here, some money there, that sort of thing. I'm basing it on, I'm going after the best candlestick reversal signals or trading signals and patterns. And again, each day with 10 positions on, I have more position options. Let's see, that's the right word. More positioning choices than I have money. So now it goes from being whether I'm in 10 good positions to cultivating my portfolio in what I think are the 10 best positions out there. So that might mean that one day I'm in 10 positions, and the next day I see 2 greater positions. I'm going to go back to my portfolio and say which ones are the 2 lousiest of these good ones, close them out, and move on to a better situation. No, Jay, that's just stocks. If I was just trading stocks, I would probably be targeting for a 10% return monthly. If I was trading aggressively or relatively aggressively, and it would probably even be better than that based upon having the positions margined. Can you look at I? I was one that was a good short, but now is in a situation where it's kind of doing the cradle pattern, but the cradle pattern hasn't confirmed. Where should this candle have closed to create a cradle pattern? More than halfway up this one. So if I bought on positive trading today and it closed here, I've only got one option. It better open positive and trade positive tomorrow to stay in it. Otherwise, if it starts trading below the T-line, what's that tell me about my trend? My trend's still in a downtrend and I'm back below the T-line. Would understand your thoughts on setting a sell limit based upon previous resistance. FLML, Flamel, whoops, FLML. Oh, what be if you could do 10% a week, that would even be better, obviously. Would understand your thoughts on setting a sell limit based upon previous resistance. Remember, the resistance levels are something to watch. The signals and patterns are your primary criteria. What's this basically telling us? We've got kind of this big fry pan bottom. Where are we right now? Well, we're at a resistance level. We're in the overbought area, but we're still in a pattern. What would I want to look at now, or what I want to watch for? Well, if it opens positive, it tells me they've broken out through the resistance level. If it opens lower and trades lower, I'd probably take profits and close out the position. But if I did that early in the day, I'd very simply put a buy stop above today's close, because if it opened here and traded down here and then turned around and came up through there, what's that telling me? That the profit taking over and the bulls are there. So maybe I gave up 42 cents, but when I got back in, I knew the trade was moving in the right direction. Oh, RW, 10% a week on option trading. Yeah, if you really concentrate on it, you can make a very good living. And I say that because I've had probably a good number of people that have come to the private training session at QCA to learn the absolute, I'm going to say, all the techniques of candlesticks put into a chronological order. And then they've gone on and done very successful trading, living, which sometimes is a disappointment because obviously we'd like to have good traders in the chat room. And I don't know if some of you are familiar with Rick Sadler of Hit or Miss Candlesticks. He was one of my first private training students, and now not only does he trade very well, but he runs his own website teaching people how to trade his technique. So it all depends on each person's, commitment and how much they want to trade. Oh, I'm trying to. Darn. Had a couple traders from 2 summers ago. They have started, I mean, they've just go trade on their own. They're making very good money at it, not on their own, but they've actually set up their own little websites and have a little group that follow what they do. So anyways, that was a long-winded answer, RW, to say yes, depending on your commitment. I keep putting money in my retirement fund, but I continue to, Konar, that's it. Thank you, Steve. Konar was a great trader and provided a lot of information in here. But then he decided to go and have his own little trading group. So that's the some of the cost of, or not cost, but expectations that I've got a lot of people that trade extremely well that go off on their own. Why was a call spread better than a straight call? Because at this point on AMBA, there's no sell signal other than the fact that we're in the overbought area and we're starting to move away from the T-line. There's still more upside potential. But up here, there might be also more risk that there be some profit taking. So I took my profits on the straight calls, but now when I do a spread, my percentage return doesn't have to be, or the move to get a good percentage return doesn't have to be as great. Plus, I don't have as much money exposed to the trade up here in the overbought condition and a higher risk. So if it continues to go up, I'm still making very good money, trying to make 150% on the trade. If it goes to 100 or higher. Cartech was the other one. Yes, Cartech, as I say, it's disappointing to see some of these good traders go off on their own, but that's the whole purpose of learning how to invest is to learn how to make a living with it, and these guys are making very good livings. Yes, call spreads, you have less money exposed and your percentage return is much greater, and the price movement to get that much training sessions. We call it a private training session because usually there's only about 5 people at each session. They're 2.5 days, and we sit in front of the screens. We're up at Keuka Lake, which is one of the Finger Lakes up in central New York State. Very beautiful country, great water in the lakes, good wineries. So instead of you sitting for 2.5 days in a kind of a sterile, what do I say, hotel, we do it where we're sitting at the computer screens and at the same time we're overlooking the lake. We take our breaks by going out and splashing around in the water. So in 2.5 days, we're sitting in front of the screens quite a bit, but in between time, we kind of get a much more relaxing atmosphere of so that you're not getting brain fried faster. You do get brain fried. But that takes people from start to finish, all the nuances there are with candlesticks. You see it all as we go through these sessions, but it's bit and pieces. And over time, you'll accumulate that knowledge or kind of those insights to see what charts look good and how to trade them. Well, that 2.5 day concentration puts you months and months and months ahead of schedule, where you come out of there and you've got a full comprehension of how to use candlesticks correctly. When do you trade options and when shares? A lot of times it depends on, first of all, what account. If you're a stock trader, you're going to trade stocks. If you're an option trader, you're probably going to be going to be trading more of options, or a combination of what I do. If I see something that's going to move good, like a $95 stock like AMBA, I'll probably trade the options. If I see something that looks like it's going to be a good trade, a good percentage move, but it's only a $6 stock, let's say something like Court, I'm probably going to buy the stock because I'll probably have more money in it and I have less volatility exposure to it. Let's see. I'll get to G-Pro and some of those. And somebody was saying, what's the cost? The 2.5 full days is $5,400. Now with that, on top of the 2.5 days, we all stay right there. I rent a house on Keuka Lake, so we stay right there at the house. So you can have your own room, obviously, but we share bathrooms, which doesn't really matter because we're only there for a few minutes, and then we're sitting in front of the screens all day. You don't have to worry about food because we buy all your food. We go to nice restaurants right along the lake. There's 58 wineries in the Finger Lakes region. We go to a couple of the best ones for lunch and dinner. And then on top of that, out of that expense, you can take whatever information you want from the website. If you want all the candlestick patterns, videos, the 12 major signals, the stop losses, whatever you want, you just email Abe and say, I was at the lake. Could you send me these? They're all free. And on top of that, I think you get 12 months of free membership on the website. So I think if you took everything that you wanted for free, it'd be more, just the free information would be more than the cost. Yeah, that's right, Jay. Can't you make more money on commodities and stocks on a smaller account? Yes, if you have the mental aptitude to trade commodities. Remember, part of investing is not only recognizing the patterns and signals and buying them and selling them, it's also controlling your emotions, because even though you've got the best trading program in the world, if you don't have your emotions in control, it doesn't do you any good. And that's just the voice of experience. I was the worst investor in the world. I found candlesticks. I started making money with it, but I was still letting my emotions get involved, and it wasn't until I had full control of my emotions where I could just step back and say, what's this chart telling you? Even though I'm thinking it could go up, it's telling me it's not. Close out the position and move on to something else. Your weekly options edge, we have the options trading room where I guess we've got about 50 to 70 people in there at any one time with some very good option traders which provide different strategies. And then I try to put out about maybe one or two option strategies on stock positioning or on option trades during the week. Okay, with that, Jim, let's go ahead and do the double line. Oh, some of you jumped the gun again. Jim, do the second double line. All right, I'll scroll up here to see who was the first person to, oh, Elsie, you just jumped the gun, didn't you? All right, TNK. Let's make these a little bit smaller. TNK, you can just stay long on this one. At this point, if I owned it, I'd use the halfway point of this candle as my stop, because that would tell me you're back down into the trading range. But right now, I would stay long on this one. ALGN, another one that has kind of that little trend kicker signal. Let's make this bigger. Notice how they gapped up from the profit taking, and when they gapped up, where did they move to? They broke out of this range. I would definitely be a buyer of this one on positive trading tomorrow. ORBK, nothing to do here, just stay long. I would probably pick a point, I'd probably use today's open. It shouldn't close back below that level. Lilly, you stay long, but notice what it's done. This is why you want to observe the different elements of the confirming indicators. We've had a nice fry-pan bottom breakout. We've had a doji, but notice where we are. We're a good distance away from the T-line. So if this opened lower tomorrow, I'd probably start taking profits. I'd first watch to see what it would do once it got back to the 3T line, and then see if they were going to take it all the way back down to the T-line. If it opens lower and starts trading down and I take profits, worst case scenario is I put a buy stop just above 79 above the doji, because if it opens here, trades down, and then comes back up through there, that means the profit taking's over. I can buy back in again. G-Pro, there's that trend kicker. And notice where the trend kicker occurred. Right here at the 200-day moving average. So it hit the 200-day, sold off, did a bearish harami. And what's a bearish harami tell us? That possibly the buying had stopped. But when they gapped it up, notice where they gapped it up, above the previous day's open, and did a trend kicker signal. And where did they close it? Through the 200. That probably is a good indication you've still got more upside. Kansas, you probably should have, if you were short, should have covered it with a close above yesterday's open. You can always reshort this if it starts trading lower. But right now you're in the oversold area. You're starting to see strength. Not a reversal, just strength. But you don't know how far this strength is going to take you. If they take you up to the T-line and it fails, you can always reshort it at that point. And MVIS. Options. Now, Jack, usually on a $3 stock, I buy options much more expensive than that. So I'd rather just buy the stock outright. Because if you just buy the stock, you've eliminated the time factor. You don't have to worry about expiration. FCX stays short. There's nothing here that tells you that there's any reason to be buying this one. And Las Vegas Sands, another one. You can see what the trend has been. It's in a downtrending channel. I'd be going short still if it just opens lower tomorrow, because it's telling you that this downtrending channel is still acting as resistance. CRMD, get ready to buy this one on positive trading. You might see some profit taking on first because of the big move, but I would be buying this one on strength. And there's a J-hook pattern in progress on CG or SGYP. Another one that I wouldn't be afraid to be buying on positive trading tomorrow. ZTS, there's your kind of your scoop pattern. You stay long until you see a sell signal. At this point, I'd have my stop at today's one tick below today's low. If it comes back down through there, that means they're coming back to test the T-line, because that would pretty much indicate they're moving in the direction of how they are trading it after they doji. Nubo, you can buy this one, excuse me, on positive trading on a doji sandwich, with the anticipation that this is just now starting its fry pan bottom uptrend. If I was long, I wouldn't want to see it trade back below today's low. That would tell me they're also coming back to test the T-line. Loco, you can stay long. You just be more aware of what it's doing once it gets to this resistance level, which you're almost there. SATS, another little scoop type pattern. You can be buying this one on positive trading. And LinkedIn, you can be buying this one with the anticipation that your first target is going to come back up and test where they gapped it down. If they break through here, now you're starting to head back up to the moving averages. AGN, you stay long if there's any change of investor sentiment. ONZO, whoops, ONVO, you stay long on this one, but if it opens lower or tomorrow, you close it out. It should open and start trading positive tomorrow, breaking out through this channel. If it opens lower, probably telling us that this channel is still in progress. It's going to come back, bobbing back down to test the T-line or test the 50. HZNP has to open positive and trade positive. You've got a little left-right combo. How do these charts get so small? So if it opened lower, I'd close it out Just see what it does as it's hovering around the T line. ACAD, just stay long. Zynga, you can get ready to buy this one on positive trading tomorrow. Doji sandwich breaking out through this little downtrending channel. Advanced micro, you shouldn't be in this one. There's nothing here. UEC, stop placement, the T-line. Still in an uptrend as long as they can't close it below the T-line. BG, same scenario. It has to open positive and trade positive. If I was buying this one, I'd put a buy stop above today's open. That would tell me the J-hook pattern is breaking out. And SYS, oh, did I do something wrong there? Let's try S.SYS. That one's not working, Joseph. Ford needed to get back up above the 200, or I'd be ready to buy this one and just need to see some strength. Did a little gap up your, flutter kicker. If they open positive, you want to be buying this one immediately, because if your flutter kicker, which is a strong bullish signal, would be breaking this downtrending channel. Apple, still sideways. I think you're still in a wedge on this one. I wouldn't be long or short Apple right now. Now, just because I wouldn't be long or short right now doesn't mean that in 4 days from now it doesn't do another signal to tell you to get in long or short. DTYS, the bearish 10-year note. You can be buying this one on positive trading tomorrow, breaking the downward trend channel, just using the T-line as your stop. XBI, stay long. Nothing here. They're still using the T-line as a support. Disney, I wouldn't be trading, but if you like it, you stay long as it stays not only above the T-line, but probably the 50-day moving average. The Qs, same as the NASDAQ. It's staying above the T-line. It's a very slow uptrend, basically telling you that there's really no aggressive selling going on in a major portion of the market. GDX, the gold vectors, you still stay short on this. Gold just isn't showing anything of any great conviction. Captain, wouldn't be long or short right now. There's nothing there. You're sideways. Lots of dojis with long shadows and big volume last 2 days. All right. Then get ready. Put your buy stop above today's high. Because it's got a bunch of dojis, it's going to move in the direction of how they break this one out, one way or the other. Bed Bath & Beyond, wouldn't be long or short this one. You're in a downtrend. There's no buy-in of any great conviction. You had a potential right here, but notice what they did the next day. They closed it more than halfway down the candle that told you the bulls were trying to take control. Home Depot. That one's just too sideways. I wouldn't be long or short this one. Let me make this. No, can't even make it look good. Wouldn't be long or short this one. Probably be more apt to go short after this big belt hold bearish engulfing signal. So I'd have a sell stop down below this level. But if it came down through here, more than likely they're bringing it down to the 200-day moving average. But even that wouldn't be a big, huge percentage move. MHK, Mohawk, just stay long in this one. A slow, steady eddy. Nothing you can really do other than just stay long on this one. And ESL, this one you want to stay short You're still in the downtrending channel. I'd suspect this is your next target. The reason I would suspect this as your target, because pretty much you could draw a trend channel. Oh, pshaw, that's not what I wanted to do. Trend, catch it. Trend channel, which means you can pretty much draw a parallel line. Oh, almost even through the tops up here and through the bottoms right here. So you can see that parallel line, so that makes this your potential target. So let's see if I can figure this one out, Barry. T2, just stay long. And I'm taking that as NVIV. You can be buying this one coming out of the double bottom. Once again, use the T-line as your stop. Facebook, still nothing here that would intrigue me. There's no direction. It's been sideways for a couple of months. I'd be trading something else. ECRX, there's your J-hook pattern coming off the little inverted hammer signal. I would suspect wave 1, you're in wave 3. Just stay long with this one. Dean Foods. Dean Foods, you can be buying this one. I've always liked Dean Foods because I can't remember whether it was 2 years ago. We had bought Dean Food, I don't know, 10, and it went to 17 over like a month period. Then there was a sell signal, so we closed it out. And then when we were up at, were you up there, Steve, with? I know Petro was. That Dean Foods pulled back to the $10 range, right on the 50-day moving average, did a buy signal, so we bought it. And I think the next day they announced something, and it went from 10 right back up to 17 that day, which meant everybody at the training session that week paid for their training from that one trade. So I always liked that one because it made everybody happy. AXTA, just stay long. Nice J-hook pattern in progress. Marianne, we'll probably either have 2 or 3 training sessions between starting the last weekend of July and the first weekend of August. There's a 2-week time frame in there. And what usually happens is people will fly into Rochester Airport. We pick them up there, drive down to the lake, and then you're stuck there for 2.5 days, and so I tell people, just ask some of the people that have been there before how they liked it, and let them answer. That way I'm not trying to snow people into something that they shouldn't be doing. Downtrending channel, I'd be buying this one on Positive Trading tomorrow. SYN. Oh, I just did that. No wonder it looks familiar. This one's stuck in a wedge. This is probably in a blue ice failure where it fell through the ice, came up, failed, trying to find the hole in the ice. I would suspect it might be on its way back down here to the 200-day moving average. Is that the 10-year bonds? Is that what you're looking for? Or are you looking for Lulu? Lulu, you're still in a downtrend until you see a buy signal and a close above the T-line. And OTIV, you can get ready to buy this. There's your inverted hammer doji gap up. Wouldn't be afraid to be buying this one on positive trading tomorrow. Just watch to see what it does once it gets to the 200-day or to the 50-day moving average. Go. Just stay long right now. If I was going to buy this, if you drew a line right through the top here, I'd rather pay right here, $22.75 for it, knowing it broke out to the upside. And Trove, another one that's staying long. If I was buying it, I'd have my buy stop right above that triple top. But if it broke up through there on the J-hook pattern, that we're still in a very strong uptrend. I think we did AGAN. Yeah, just stay long on this one. ARIM. Want to stay short on this one ever since the doji. And where's the likely target? Again, you can pretty much draw a trend channel through the tops and through the bottoms. I would suspect down here is your target. Stay short. ESI, this is called what you call a column reversal, also a cradle pattern. Notice how flat it traded. I'd be a buyer of this one on positive trading. That's a good looking chart. It's going to get a little star. NGL, bullish engulfing signal. This is another case where you should have been out of it on a lower open, except for the fact that as soon as it opened, it started trading positive. So that told me if I owned it and it started trading positive, you hang on to it. But if it started trading positive and then came back down through the open, that's when you close it out. That tells you that bounce was over and they're still coming out of it. Boston Scientific, nice little J-hook pattern right at the breakout level. I'd put a buy stop at probably 1870. It came up through there. It's broken out. And OUTR has to open positive. This is still in the framework of a bearish doji sandwich. If it opens lower tomorrow, you close it out immediately. You're getting sell signals, and then you had your left-right combo, and if it opens lower, it's going to move in the direction of how they open after a doji, which means your doji sandwich to the downside tells you want to be out. When buying options, generally, how many weeks out do you buy? I'm usually trying to buy the closest strike price for one basic reason, because when we're looking at candlestick charts, it's telling us what's happening right now. So I buy the closest one. Now, if it's starting to get too close, usually anywhere from 3 weeks or greater before expiration, I'm in calls or puts outright. 2 to 3 weeks out, I'm starting to buy the spreads because your maximum profit is going to be on expiration day. You don't want to be too far out in front of that. And then a lot of times the final week, the 2 to 3 week time frame are debit spreads. The final week are credit spreads, which aren't highly profitable, but the probabilities of making money with them are extremely high. So you're just kind of chinking a little bit of money in your account every day. Southwest, you can get ready to buy this one on positive trading. Just use the T-line as your stop. And Mankind, just stay long. Use the T-line as your stop. Starbucks, did we do that earlier? Just stay long. Nothing that I never got excited about Starbucks, but if you like it, you stay long as it stays above the T-line. Goodyear, another one that you stay long on. There's that little morning star signal, breakout. All you can do right now is stay long until you see a sell signal. We did G-Pro, Guild. That's a trend kicker signal, which means there's going to be more upside. Trend kicker signal, you're in an uptrend. They open it, close here. The next day they gap it open above the previous day's open and go positive. high probability there's still more upside to this one. United Rentals, you stay short. If you were short, you saw the bullish Harami, but notice you still haven't gotten to the oversold area. Very simple. If it opens positive, I'd cover my short position. And then I'd put a sell stop right back here at today's open. And if it came back down through there, that means they've negated that bullish Harami. The gap down from the doji and starting to gap down is still in progress. And EGRX, stay long. Use today's open as your stop. Shouldn't come back down through that level. EXJ. Wisdom Tree, was this an ADR? Oh, Japanese fund. Japanese fund, you stay long. Yeah, the last survey I just saw was that supposedly males in the United States have sex anywhere from average of 2 to 3 times a week. And the Japanese male supposedly only has sex once or twice a year, which doesn't really mean a hill of beans to me, but I found out a lot of my fraternity buddies were pretty disappointed to find out that they were Japanese. AFSI, you're right at the breakout level. You're not in the overbought area. If it opens positive, you're breaking out into new territory. Pretty much the same type of chart pattern that we saw in ADX, right in the breakout territory. Oh, good evening, Petra. Yeah, pick them up. We almost did last year. I think last year I bought a Mercury, that Mercury, while we were up there at the lake. Can you use buy stops on options? I think you can do contingency orders that if the stock comes up through $50 or whatever price, you put in an order that the contingency is I want to buy the June 50 calls at the market. Let's see, SSYS. Nothing here that I can see. I'd be more apt to get ready to go short on this one on a bearish doji sandwich setup. Let's see, we did G-Pro, right? G-Pro did the trend kicker up through the 200. You just stay long until you see a sell signal. Does it make sense to buy leaps instead of actual stocks if stock is expensive? Yeah, if you can do that. Again, whatever you're buying is up to each individual. So when somebody says, well, is it better to buy the stock or the options? It's based on what you'd like to trade. Some people don't like to trade options because they're too volatile or the risk factor is too high. And then it gets down to some people don't like to buy out of the money options. They feel more comfortable buying in the money. So it's all on what you, all depends on what you want to be trading. The basis of whatever you're trading is, what does the underlying chart look like? This is this the Russian Bear Fund? Yeah, you could be buying this one. Leaps cost rent, okay. Okay, one more and then we'll call it a night. ENZN. This one you can get ready to buy. There's your little stutter step, kind of the double doji setup. I wouldn't be afraid to be buying this one on positive trading tomorrow. Didn't we just do G-Pro? G-Pro did the trend kicker signal. You stay long on this one. Okay, everybody. Way past your bedtime. Way past your bedtime. All right, we'll see everybody bright and early tomorrow morning. We'll see you then.